Good morning, everyone. Welcome back to Stock Chats. Remember, this is not investment advice. If you need investment advice, speak to your reputable licensed financial advisor. Also, please uh, click the like button, the notification button, share, and subscribe. You're helping me with the algorithm, so the more persons who like the video is the more persons will see it, and this channel can grow. So earning season is still going on, and we got one of the big giants. Their 9 months is out. Grace Kennedy Limited. Everybody knows Grace Kennedy in Jamaica. Grace Kennedy ketchup, Grace Kennedy coconut milk, Grace Kennedy baked beans, Grace Kennedy corned beef, and of course, if you don't know, Grace Kennedy is also into insurance. So you have GK Insurance, and there's the money transfer. They control the Western Unions in Jamaica. So Grace is out, and its 9 months is really pretty exciting. They have managed to do a lot in this 9 months in 2020 despite of the pandemic. Remember, we had a video about looking into defensive stocks, and Grace Kennedy, especially in their food trading area, is a defensive stock because everybody has to eat. So we're not even going to look at the profit and loss. We're just going to look at the segments right now. Maybe in a later video we'll look at the profit and loss. But we're going to look at the 9 months results in comparison to last year, 2019. Now, Grace Kennedy has really, over the last couple of years, depended largely on the money services to uh, improve their bottom line. And as we can see, the total revenue for 9 months in 2020 was over $86 billion. Most of that revenue was coming from the food trading, which is at $68 billion. And you have banking and investments. Grace Kennedy also has an investment leg and a banking, I believe it's First Global. And that came in at 4.7 billion. We have insurance at 7.6 billion. You remember that they also now have a partnership with Musan Group Canopy Insurance that deals with larger insurance, insurance companies and stuff, and reinsuring. And they also have Key Insurance now that they took over, that was on the Junior Stock Exchange. They moved it to the main market, and that's coming in at 7.6 billion. Money services at 6.4 billion, and consolidation adjustments, there's at a loss because that's when they're bringing things together like Key Insurance. But Key Insurance is not going to be consolidated, but other businesses. So when you look at revenue in 2019, it was at 77 billion. So we see an improvement. Food trading at 61 billion, banking and investment at 4.5, insurance at 5.9, and money services at 5.7. But if you look at, even though money services only provides 5.7 billion in revenue, their profit margin is a lot higher because it represented 2.3 billion in 2019, and food trading was even less. Despite earning revenues of 61 billion, it was at 1.5 billion. So we go back up to 2020, and we find that food trading is now making an impact on the bottom line, which is profit before taxation. We see it at 2.9 billion. And the revenue from money service, of course, is still the major profit contributor with $3.3 billion. So for the year 2020, net profit, that's profit after taxation of 2.3 billion, is now $4.9 billion in comparison to, let's look again, $3.7 billion. Another interesting note about Grace Kennedy at the moment is that we mentioned in an earlier video that cash flow is important, especially now under the pandemic, for companies to keep afloat and also to ensure that when opportunities arise during this time, that they will have money to take part in it. And if we look at Grace Kennedy's cash flow, here's the bottom figure right here. Oh, yeah, sorry about that. We're seeing that it has increased significantly to $24 billion compared to $22 billion last year. So that is telling us that Grace Kennedy has a huge cash bank right now, and whatever they want to do with it, they can do with it. Whether it is going to be mergers and acquisitions, cash flow is actually at $21 billion compared to $11 billion. So that is a huge jump. A huge, huge jump. So Grace Kennedy has a lot of cash on hand to do whatever they like to do with it, whether it's merger and acquisitions or improving their business efficiencies. That is a lot of cash on hand, 21 billion. So they are very, very strong in regards to liquidity. And in these times, liquidity is very important because that's how companies survive. So what is the reason why Grace Kennedy has made such improvements? If you go up to the manager's report, the chairman and manager's report, you will find out that the international food segment has been doing very well. Over the years, they have increased their presence internationally, especially in the States, Canada, and the UK. In the States, they now have a very promising frozen patty line, along with some other frozen food items that are doing very well. Also, they have recently opened a warehouse warehouse facility in Maypen, where they do all their international products for import. So they'll be doing sweet potato purees, canned callaloo, canned ackee, and a number of other items. And these items are strictly for export. So Grace is doing extremely well in improving their profitability in the food trading segment of their business. And so we are seeing them move gradually away from receiving most of their profits from their money services, largely Western Union remittances, to food trading. So this is Grace, and we'll have other videos because it's earnings season, financial reporting season, and so there's a lot of information coming in. So please like, subscribe, and hit that notification bell so I can have some good times with the YouTube algorithm. Have a good weekend.